take a look at this win, and this win. All of these trades were taken this week, and for each of the trades I made a risk to reward ratio of 1:3, which is 3x. Now imagine how much you would have made taking this kind of trades in just a week. So you see, a lot of traders are still stuck trying different strategies in a bid to be profitable. But the truth is, profitability comes from mastering just one strategy, and to add to it, it is the simplest of strategies that actually convert to consistent profitability. So in this video, I'm going to be showing you guys a simple ICT strategy that you can use to start making profit. This strategy is going to increase your win rate, it's going to give you a higher risk to reward ratio, and of course, it's going to make you profitable consistently if followed correctly. Now, if this is the kind of video you like, please like this video now, subscribe, and also comment and share to your friends. And if you have done that, let's shoot. For this strategy, the concept is simple. You are actually looking for liquidity sweep, and you are focusing on the daily time frame to find this liquidity sweep. Now let's explain a concept that happens in the market. There is a concept called balance. So the market seeks to create balance between the buyers and the sellers. What this means is, when the buyers are taking over, that's when you are seeing impulsive moves. The market always makes sure the sellers are given an opportunity to also do something in the market, and that's why you see a retracement. The idea here is you want to check the daily time frame, the kind of candle that closed the previous day. So if it is a green candle, it means that the previous day the bulls were in control, and so what will happen is that for the start of the day, most likely the bears will be given an opportunity to do something as well, to create a balance. And that's why you will see that most times the market will start with a red candle, and then before it continues going up. That's if it's bullish long term. And then if the previous day candle is red, it means that the previous day the bears were taking control, and so what will happen is, likely for the start of the new day, the bulls will be given opportunity to do something as well, and then before the dump continues. That's if it's bearish long term. So this strategy is actually a power of 3 strategy. So we are looking for liquidity sweep, we are looking for an impulsive move, and then we want to enter on a retracement. So I'll take you guys to my screen now, and let's further dissect this. So if you look at my screen now, you can see this is a daily candle. This candle is what you want to look out for every day. So when you come for a new day, you want to look at the previous day candle that has closed. So if it's a red candle like this is what you will see. Of course, I use black for this, and then you want to make sure that you confirm if it's red or green. This is actually how it will look on a smaller time frame. But let's move. So this is the idea of this strategy. You want to see liquidity sweep. So this area called manipulation is liquidity sweep. Now, liquidity sweep is what moves the market. Whenever you see an impulsive move, it is always pioneered by liquidity sweep. Why? That's because the smart money always go after liquidity, and this is where retail traders place their stop loss, and that's why most times you see that your stop loss is taken out first, and then the market continues going in your direction. So you want to make sure that you enter after liquidity has been swept. That's the idea of this strategy. So here in this manipulation, you see that liquidity has been taken out. That's what manipulation is. And then when this distribution happens, we want to enter on this retracement down here, then we go up. So this is the same thing. So this is the idea of the strategy now. So like I said, if the previous day candle is green, the sellers will likely be allowed to operate first from the start of the new day. This is what will likely happen. Market moves up first to clear out liquidity at the high, because of course sellers want to go down. But like I said, liquidity is what moves the market. So the smart money will go for liquidity above first, so that they can now get enough liquidity or enough drive to go down. Think of it like a car. A car needs fuel to move. So liquidity is like the car for smart money to move. They will go up, sweep liquidity at the top, and then you see market come down to an equilibrium level, and from here you can see market to continue up. So this is likely 3 scenarios that you likely see. That's if the previous day candle was green, and then you see this. Now if it's red, that means for the new day the bulls will be given an opportunity to do something. So likely the liquidity at the low of the previous day will be swept first, and then market goes up to the equilibrium level, and then from equilibrium we'll likely see market continue going down, or might likely go up. It can be this scenario, it can be this one. Market goes to the equilibrium first and then come down. Market goes down, sweep liquidity first, and then goes up and continue. So the idea is, if the previous day candle is green, you want to wait for liquidity sweep at the high of the previous day, and then you want to take a short after the confirmation you expect. I will show you guys in this video. And then if the previous day candle was red, you want to wait for a liquidity sweep at the low of the previous day and then take a long. So we move to the next. So this is the checklist of what you should be looking out for. Number one, you want to mark the daily open. The daily open of the previous day, you want to mark out previous day high and low on the daily time frame. Then you want to mark out the equilibrium level. Then you wait for liquidity sweep at high or at the low based on the scenario. I'm going to show you guys more explanation. And then 5, you wait for formation of order block, breaker block, or mitigation block at the liquidity sweep. That's after liquidity sweep. And then you can finally enter the trade. If the above is formed, use OT, or you can just enter based on what I'm going to show you guys. Have your TP and SL. So your TP is most likely going to be the equilibrium level. So let's go straight to analyze this further. All right, so this is what we are looking out for. The previous day candle opens, right? Now this is a scenario of a bullish previous day. This is if the candle for the previous day was green or bullish, and then this is if it was bearish, right? So this is what you want to look out for. You want to mark the previous day high, mark the previous day low, and also mark the equilibrium level. So what you want to wait for, if this candle was green, you want to wait for market to go up and sweep liquidity at the previous high, daily high. So you want to wait for something like this, market sweep out liquidity, and then you want to take a short and target the equilibrium level. And then if the daily candle for the previous day was red, you also do the same thing, mark the previous day low, previous day high, and the equilibrium. Then you want to wait for market to sweep liquidity at previous day low. Then you take a long and target the equilibrium level. This is the idea of this strategy. So now let me give you guys what you want to look for an entry. Then we'll go straight to the chart. So for your entry model, this is what you want to look out for entry. Now this is the setup you want to look out for. You want to wait for something like this. You want to look out for something like this, a liquidity sweep like this, and the market structure shift. This is what you want to look out for. And then that's if you are going to take a long. You want to wait for something like this or something like this, market structure shift. So once you see a market structure shift this way, you can place your entry around this, maybe a fair value gap on this area, and then you take your entry to go long. Or you can also use the order block, come down and go up. So I'm going to show you guys what another block is on the chart. So these are the two setups you want to look for. So again, you want to look for something like this, right, or something like this, right? So once you see this kind of market structure shift, then you can safely enter the trade. Now let's go straight to the chart and find these things. So first thing, you want to go to the daily time frame. So you go to the daily time frame. First of all, I took a particular trade on Uni using this strategy. So let me break that down for you guys. I took it, so I'm going to go straight to 15 minutes. This was a trade that I took with this particular strategy. Now let's break it down. This particular line here was the previous day low. So the previous day, the market was bearish. The candle was red. For me, I used black. I marked my previous day low, which is this line, and I marked the equilibrium level. So I waited until market swept liquidity at the low. You can see this particular candle here. So I'm going to zoom it. This particular candle here swept liquidity at the low. Once this happened, I'm waiting for a market structure shift. So that's what happened here. If you look at this, you mark this part, you can see that this was actually a break of structure here. The market retraced, break of structure right here. This was a break of structure, and then we saw its retracement. Then market came down, swept the liquidity, and then closed above this previous high here, giving me my market structure shift at this point. What I just did is to find my entry at the order block. So where is the order block? The order block is simply this candle below, close to this impulsive move. So when you see fair value gap, the candle below, just close to the fair value gap, is the order block. That's most likely what you want to look for. Or you can also take your entry at the fair value gap. Yeah, so this is our order block here. This red candle, this whole red candle is the order block, because it is the closest candle to the impulsive move, to the fair value gap. That's our order block, and then this is also the fair value gap here. So I put my entry at the order block, put my entry here, and then you can see market went up and went straight to the equilibrium level. So this is your target, and this gave us a 3 risk to reward ratio. So once you see this, it always work out. As long as liquidity has been swept, you can put your entry at other blocks and then you go up. So that's just it on this strategy, and you can go ahead to check many strategies, many charts, and backtest this, but it is what I used to get the 3 wins I got this week. All right, so that's it for this strategy. Now let's do a walkthrough from beginning on how to analyze using this strategy. So first thing, let's use Ceeyoung USDT. Come to your daily time frame, and if you look at this one here, this was the previous day candle. It was red. So what you want to do first is to mark the previous day high using the horizontal ray. So this is previous day high with this particular candle. That's what we're focusing on. And then I'm marking the previous day low as well. You want to mark the equilibrium level also of that candle. So to do that, you use gam box. So this particular place here, this second area, you click on this arrow beside it, then you locate gam box at this place. You draw from down to the up, so from the low to the high. So if your gam box is not set like this, I'm going to open the settings now. Just click on this. So this is the settings. You can pause this video and make sure your settings fit this. Once your settings like this, it's going to look the same way it's looking on my screen here. So this area down here is to be green and this area should be up. So this line here that says 0.5 is the equilibrium level. So you want to also draw a mark on that. So I like to use a blue color, so I'm going to just color it here. Just put this blue color. The blue color is my mid equilibrium zone, the up is red, and I like to use green for the low. So you can just decide whatever color you like. So once you have done that, you can actually take off this because it was just to give us the equilibrium level. So I can now go straight to my 15 minutes time frame, find my entry. So what am I looking for? I'm looking for a market structure shift after liquidity has been swept. Now you can see here liquidity have actually been swept. If I zoom in, you can see that this candle here have swept liquidity at this line. So once it closes below, it crosses this line, it has swept liquidity. Of course, liquidity was here. This was the previous day low. So this particular line here has swept the liquidity. So what next? I'm expecting a market structure shift. So what I want to see now is the market close above here. Right, so this is a high, this is a low, liquidity has swept here. This is new high, market is coming down. I want to see something like this. Market comes down here and then closes above here. Once it does this, that confirms my market structure shift here. So once I see this, I'm going to wait for a retracement to an order block below here, or a fair value gap like I explained initially, right? Using the first trade example I showed. I'm going to wait for a particular order block just somewhere below here. So your entry is at the start of the order block. Your stop loss should be below the liquidity sweep level. Let's experiment that. So once I get that, I'm going to put my entry here at the start of the order block. My stop loss below that liquidity area there, just here. And then my TP should always be the equilibrium level. This is going to give us about 2.95. I could actually adjust my entry to give me a 3 weeks to roll because I like to use 3 as the minimum. So this is already 3.0 now. This also still fits to our order block. So this trade will play out and you'll see how good it's going to be. So this is exactly what you want to do, and you can see how simple it is. So that's all on this strategy. So if you follow through everything I've shown you guys on this video, you surely have consistent profitability. Here is one important thing. So over the years in my trading experience, I've noticed something. Knowing a strategy alone is not what will make you profitable or consistently profitable, because you can know the perfect setup, you can be able to find the best entry and everything, but one thing will still or can still hinder you from being profitable, and that is psychology, that is emotions. So a lot of traders end up knowing the best strategy, have the best risk management approach, but they can't control emotions. This is why it is best to add to your strategy maturity when it comes to psychology, because if you don't do that, you will still find yourself over trading, doing revenge trading, applying greed, fear, and all that. And all of this doesn't end well. It only jeopardizes your portfolio. So that's why we have created this particular materials. There are 2 books. So one of them is going to expose you to secrets, major secrets that's going to help you build your emotions and become mature. A lot of things that people won't tell you online, it's in this book, and it's also going to show you how to grow a small account effectively. The second book is going to take you through a practice for transformation, because it's not enough to know the secret, you also need to understand how to put them to work and become a better version of yourself. It's best to get these 2 books and study it. So I'll put the links in the description. Now I noticed something. Most traders are not failing because they don't know the strategy, or they don't know the plan, or they don't have a system. They are failing because they have not amassed to the best profitable version of themselves. So these materials will bring you into that best version of yourself. So click on the link below to get it and start, because your journey for profitability is going to start from there. And that's it for this video, guys. If you enjoy this kind of content, please again like this video, subscribe to this channel. Come on, we are doing a lot. Join my community if you want trades, free trades, right, updates to make you win in this space, because you need to follow winners in this space. And then lastly, if you are busy, you can actually start copy trading. So I'm a master trader with over 3 years of experience. You can copy my trades automatically on Bluefin. So we're actually currently going on a challenge to grow $50 to $800. We have passed the first quarter of this. So you want to start now, you can join my community to start, and you can also copy me. When I take trades, you also take it automatically and earn passively on Bluefin. So the link is also going to be in the description, and I'll advise you guys to actually take action immediately. Don't procrastinate. That said, don't forget you are one step away from financial freedom. I'll see you guys on the next one.